IAS 21 deals with the definition of functional and presentation currencies, accounting for individual transactions in a foreign currency, translating the financial statements of a foreign operation. 1. Functional and presentation currencies. Functional currency, currency of the primary economic environment where the entity operates, IAS 21, Para 8. Primary factors when determining functional currency. The currency that mainly influences sales prices for goods and services. The currency of the country whose competitive forces and regulations mainly determine the sales price of goods and services. The currency that mainly influences labor, materials, and other costs of providing goods and services. Secondary factors. The currency in which funds from financing activities are generated. The currency in which receipts from operating activities are retained. Factors should be considered when a foreign subsidiary uses the same functional currency as its parent. Whether the foreign operation operates as an extension of the parent, rather than having significant autonomy. The level of transactions with the parent. Whether cash flows are readily available for remittance to its parent. Whether the foreign operation has sufficient cash flows to service its debts without needing funds from its parent. Presentation currency, the currency in which the entity presents its financial statements. This can be different from the functional currency. 2. Accounting for individual transactions designated in a foreign currency. Where an entity enters into a transaction denominated in a currency other than its functional currency, that transaction must be translated into the functional currency before it is recorded. The exchange rate used to initially record transactions should be either the spot exchange rate on the date the transaction occurred, or an average rate over a period of time, providing the exchange rate has not fluctuated significantly. Cash settlement. When cash settlement occurs, such as when cash is received from an overseas credit customer, the settled amount should be translated into the functional currency using the spot exchange rate on the settlement date. If this amount differs from that used when the transaction occurred, there will be an exchange difference. Exchange differences on settlement. IAS 21 requires that exchange gains or losses on settlement of individual transactions are recognized in profit or loss in the period in which they arise. IAS 21 is not definitive in stating where in profit or loss any such gains or losses are classified. It would seem reasonable to regard them as items of operating expense or income. However, other profit or loss headings may also be appropriate. Treatment of year-end balances. The treatment of any overseas items remaining in the statement of finance.